Good morning, everyone. I think we've got the sound check out of the way, so it's 9:16, and I'll go ahead and dig in here. As the description to my presentation suggested, I'm actually going to be talking about an indicator that's in pretty much every system out there, but that's generally so underused, and you'll walk away with knowledge that you can use to study the markets and to improve your trading immediately, again, using just a very commonly referenced indicator. So a couple housekeeping things from my end. I am going to go to live charts. I have a PowerPoint, as you see, but given that we have this wonderful 75 minutes together, which is very rare for us speakers, just so you all know, I want to make it we're able to look at live market action. And by the time I move over to my TradeStation charts, the market will be open, especially for stocks and the active point of futures like the E-mini. Now, Dan did give a nice little succinct introduction about me, but I always start my presentations with kind of a story of my life. Why? Because it tells you why you should probably bother listening to me and staying on past the introduction. And with that, we'll just dive right in. So before we get into the fun stuff, of course, there's the importance of understanding the risks of trading. And with this key little piece here to remember is that it's your responsibility to evaluate any information, opinion, or other content contained within my presentation. Now, usually with questions, when we have limited speaking time, 45 or 60 minutes, I usually ask questions hold to the end or at least be repeated at the end. We can always still do that here too. If you ask a question and I miss it, feel free to repeat it at the end. But I want to make sure that I keep you guys, engaged and involved and active. So if you've got questions, I've got the screen up on my second window here. Go ahead and ask questions as they come to you. All right. But again, if I miss it, I'm just human. I only have one set of eyes. You can always ask toward the end. All right. So one question already has come up. Excuse me. Sorry, I have a tickle in my throat that started last night, and it's only getting worse, but I'm going to do my best to power through it. Do I have a website for those of you interested in my Gann work? Absolutely. You can glance at it while we're talking here and I'm doing my intro. HimaReddy.com. So it's my first name, last name, last name.com, HimaReddy. Just tells you a little bit more about me, but I'll give you information at the end if you really want to kind of continue learning with me and like you said, Marcelo, see more of my specific work. All right. So this is me, Hima Reddy. I've been studying trading, analyzing markets for over 15 years. And I was actually introduced to them by my late father when I was just a teenager. So he was a doctor, but I specifically remember asking him for chemistry homework help one night. And he was actually in his study with a computer open and looking at stock charts and trading. But he didn't have the news on in the background. He wasn't, looking at a newspaper. This is the 80s. And I was like, how are you making these decisions? He said, well, I'm actually using math and probability to decide whether to buy or sell certain stocks and such. And I said, well, does it work? He's like, yeah. So I was hooked. I was 16 and I know anything about markets, but I knew a lot about math and I loved science and these logical approaches to things that maybe seem illogical. So I was super inspired by what my dad taught me and I went ahead and went on to college. Now I grew up in New York, in Long Island, and I went out to Indiana University. I studied super hard, got my finance degree in 4 years. But when it came to actually learning about the markets, right, learning about trends and price action and all of these different indicators and things out there, I didn't see any of this. So my dad and I had a long talk my senior year, and we came to the agreement that I'd be able to move back home, work part-time, and he would actually teach me in his spare time, which there wasn't much of, but I think he was really excited that one of his 4 kids was really getting into this stuff that he'd always loved doing on the side. So the first step in my self-made technical analysis teaching course was my dad gave me this book that you see here. It's called How to Make Profits Trading in Commodities by W.D. Gann, who is pictured here. Now, I want to get a poll in the room. Just give me a G for Gann if you've heard of Gann and you're actually familiar with some of his work and approaches. That way I know kind of, in terms of beginner, intermediate, and advanced. Usually, if you're a beginner trader, you haven't heard of Gann, and that's fine. But it looks like a few folks definitely have heard of Gann and know a bit of what he's about. Wonderful. So Gann actually was a writer and a trader back in the early 1900s. So as you might imagine, reading this book was a little challenging for me as a 22-year-old because there were charts, but they were all hand-drawn. They weren't very colorful or vivid, and he had bulky pieces of text and then a chart as an example. So it wasn't like a video or an interactive way to learn. So the other thing that my father gave me as an assignment was, okay, read this book, and he set me up with TradeStation software because he said it's the best, and he had been doing this for a while, so I trusted him. And I continue to use TradeStation today. But what my dad told me specifically to watch was the E-mini S&P 500 futures market on a 1-minute bar chart. Okay, no candles, no Ichimoku, no anything like that. He just wanted me to get familiar with pure price action. He didn't even want me to color the bars red and green for up and down, okay? Just pure price action. And I actually did this for 3 hours a day, obviously every weekday, for an entire month. Now, this was something that I really was not excited about, but my dad's letting me live at home, rent-free, I'm working part-time, and I got to follow his rules, right? But here's the crazy thing. It just took a few days, and between reading the book and then watching the market alongside it, I started to understand some of the signals that Gann was talking about, and I started to see them emerge on my little 1-minute E-mini bar chart. So I thought, hey, there must be, something to this, that these concepts and these patterns and these price trends actually do happen over and over and over. So what I did was, because I was reading a book that was written in, the early 1900s, 1930s and 40s, I actually made my own diagrams like the one you see here. I drew them out on paper, then I went and made them graphical, and then I put them on index cards, and I piled them up all around my computer screen. This way, I had my own visual guide in order to capture the signals that I was hearing about in Gann's book. Now, another thing that I did was I actually started writing my own, call it a newsletter. It was just an email, and it was from me to my dad each night, because he didn't ask me to do this. I actually did this to improve my own learning. I would look at the market, as you can see here, after it closed, usually late in the evening. I mean, I was young, so I had a more of a late sleep, late wake cycle to me. And I would look at the action, and given that the E-mini S&P 500 trades 24 hours with the Globex and all, I actually was able to kind of set my whole plan out for the next day. And so since I was looking at the lowdown, the basic points, the key elements, I named it the skinny on the mini. And then I started forwarding it to my dad every day. And as you can see in this email, when he didn't look at it, I would make sure that he did, because I just kind of wanted to get, obviously his highly experienced opinion. Now, I actually went on to study for something called the CMT. I looked up this abbreviation, and it actually could stand for a lot of different things. Crew mission time. Do we have any Coast Guard kind of folks out there? Then you'll know that. Children's music theater. I actually used to volunteer a lot at children's museums and for children's educational funds, so that is an abbreviation I'm familiar with. But do you guys know what I'm talking about? Do you let me know what the CMT is? Type it out in the room for me. Or at least just say yes. That way, again, I know where you are in terms of your understanding of the professional aspect of trading and investing. Okay, cool. So it stands for Chartered Market Technician. And what happened was that I learned that this would be my ticket to getting into the field of technical analysis as an analyst. I was learning day trading from my dad. I was doing day trading. I was going along fine, but that wasn't my passion. I wanted to analyze the markets. So I started studying for the CMT. It's a 3-year program now, but it was a little bit shifted then. You could take the exams kind of one after the other, and I really dove right in. So what happened is I started getting really busy studying. I would write the skinny on the mini. I would send it to my dad. And here's the crazy thing. I wasn't trading and spending 3 hours looking at the ES as much anymore. But my father started applying what I wrote about in the skinny to his trading, and he started making winning trades with it. And this was pretty awesome news for us as a father-daughter team, because, I was getting good at something that he had brought my attention to. So we were both pretty ecstatic. Now, I finished my CMT exam and actually went on to work as an analyst at a research firm, Informa, as Dan said, in New York City for several years. Then I got the chance to write my own introductory book focusing on Gann. See, me telling you this story, especially for those of you who are totally new to me and my work, when you saw those little illustrations I made, those are the kinds of things that ended up in my book, obviously taken to the next level. But because I had been a self-taught Gann person for a number of years, and my colleagues knew about that, this opportunity came along, and my book pictured here, The Trading Methodologies of W.D. Gann, published in October 2012. Actually, when I was preparing this slide deck, I realized that my book just passed its 5th birthday, and I didn't even acknowledge it. I was like, I hope that's not a premonition of how I'm going to be as a parent. I would hope that when I have a kid and they turn 5, I'm a little bit more excited. But, my book is part of my everyday life, and I guess I wasn't realizing, 5 years had already gone by. So I actually, what I did is after I wrote the book and I wasn't working at a research firm anymore and I could kind of control my own output, I actually started sending out the Skinny on the Mini that I've only been sharing with my dad now to book readers and people who attended webinars and presentations like the one you guys are at right now, as well as my technical analysis colleagues, because those were the only people I knew who were using technical analysis every single day. Now, something interesting was that when I sent this out, I first actually just did it as a blog. I just wrote it on a website, told people where to go. Then I was getting curious about who's actually reading this and making use of it, so I started sending it out as just like a free newsletter on a listserv. So I did this for a while and continued to trade, and it was going really well. And then actually my husband, who's pictured here, got a job out in Minnesota, and he's from Wisconsin. So for those of you who don't know, I grew up on the East Coast. I didn't know Midwest geography until I was a lot older. Minnesota and Wisconsin are right next door to each other, and my husband is very proud of the fact that in our now 6 years of marriage, he has gotten me to become a T-shirt wearing and a bratwurst eating Green Bay Packers football fan. It took a bit of effort from him, but he's very proud of that. So between his job in Minnesota and my new position that I found there at Piper Jaffray, so in the equity research team as a technical analyst, we thought we'd be staying in Minnesota for a while. And the constraints of my new investment banking job did not allow for any independent research. So what happened was I had to come back to all these people. Okay? The population of Skinny on the Mini readers had grown. And I came back and I said, hey, you know what? I can't send this out anymore because I've got this great new job. And they all were super sad and started suddenly telling me how they were using my report and my analysis and my approach to the markets to shape their own approach and to improve the risk reward of their trades, to get in at some key support and resistance levels and more. Now, the last part of this story is with us moving from Minnesota back to my home state of New York, and that's where we live now, upstate in Buffalo, because my husband is a cancer surgeon at Roswell Park. Now, in this transition, I actually left my sell-side analyst role, and I started writing the Skinny and the Mini again. But knowing the value it was providing to people and really wanting to make this something that I could do and sustain every day, I came back to folks and I said, hey, I'll offer this to you for a monthly subscription fee. And without hesitation, they started paying me for it. Okay, I just want to reiterate that people started paying for something that they used to get for free because this is how important and valuable it was to them. They started asking me a lot of questions about how I analyze the market with even more detail and how they can use that information to improve their trading, whether they actually are trading the ES or other markets. This is what leads me to being here with you today. I'm really excited that now if you go to my website and see my logo, the tagline says analyst, author, educator, because those are the things I really find my passion and excitement from, and I've been really excited to help a lot of people just in this short span of time, starting in 2016, that I've been doing this on my own. So now you know who I am, and I think you've made your decision on whether you should stick around and listen to me. Because I get it, it's early, and the market's about to open. But let's take what I've done and now use the KISS method my father would always tell me about. Keep it simple, smarty, not stupid, to make sure we're all on the same page about this concept that I want you to learn today. Okay? So in order to do that, first we're going to explore our routines as traders. We all got them. I'm sure some of you have started those routines this morning. And we're going to use a very simple concept. Oh, excuse me, that's the market opening. So that's TradeStation telling me. Everybody see something on the screen, a little rubber ducky? Just give me a D for ducky to make sure I haven't lost you. Marcelo, that was not a taco or a hot dog. It was bratwurst. So bratwurst is a type of, I don't know, German sausage or something, and there's a lot of German folks in Wisconsin. So what you do is you eat brats and you watch football. Okay, everybody sees my rubber ducky, awesome. So now I'm going to ask you some questions and just give me those Y's for yeses out there every time I'm hitting the buzzer here, okay, and hitting upon something you do. So whether it's today, November 1st, as your trading day and education day or any other regular trading day, do you turn on the TV maybe while you're having breakfast or getting ready for the day? Do you listen to the radio? Do you do this maybe while driving to work or, on on an app on your phone or your computer? Do you then go to actual news apps? Sit down to your computer and open email, all of this to get the news for the trading day ahead. I'm sure everyone here does at least one of these things. I personally watch about 10 minutes of CNBC while I eat breakfast because that's about all I can ingest before I need to ignore everyone and go do my own analysis. So the news obviously is very important. We want to know what's going on politically, economically, and unfortunately we live in a world that has a lot of tumultuous things going on, some very sad. You know, I have a close place in my heart to Manhattan because I lived there and was horrified to hear about what happened yesterday in the Lower East Side. But knowing things like this are important as traders because we actually need to be aware of events that might kind of throw things off short term, right? Especially if you're day trading. So I'd love to know that while I continue here. If you are a day trader, give me a D for day trading in the room, meaning at the end of the day, your preference is to just be completely even, okay? So that was the first little duck, is the news. And now we move on to the second little duck. You know, they're a little family here. So we've got research reports, things like the skinny on the mini or anything else you might get, whether you subscribe to it or it comes free. And you read these and you analyze these along with your charts to try to get a heads up on whether the bears or the bulls are going to be in charge at the start of the session. Wow, okay. So looking at my little poll here, there are not quite as many day traders as I would have thought, but that's good to know. Some of you then obviously may be swing investors. So give me an S for swing while I continue here so I know that you're much more of a looking at keeping your trades on for a couple days, couple weeks, couple months. S for swing. So this is the analysis mode. Again, super important and a key proponent of anybody's morning or afternoon trading routine. Now the next small duck. You take a chart like this and you probably have an urge, if you're a technician like me, to put something beneath it. 1, 2, maybe 3 indicators, all right? Indicators can provide a lot of insight into the market, especially when it comes to volume and market sentiment. And when you use them correctly, you can actually better understand what's going on in any particular market. The thing is, you can see here, guys, we've got all the little ducks, news, analysis, indicators. But what's the mama? Okay, the mama is the duck you need to follow because the little ducks out in the world follow the mama to the nearest food, shelter, water, body of water. We need to do the same thing. So in order to follow mama, you need to know what the mama is. To follow the mama in the markets is to follow momentum. Okay? I did this so that you can remember that super easily. Mom is in momentum, follow mama duck. And to follow momentum is to follow price. Momentum is directly derived from price. There can be very complex calculations or very simple ones, but it is a derivative of price, not volume, not anything else. All right, so we're all on the same page about the importance of momentum. Now, let's make sure we all understand how it works. And before I move to the next slide, I got a pop quiz for you. Where did I say that I went to college? Anybody remember in here? I said it was out in the Midwest. All right, and it's a Big Ten school. That's another clue. All right, cool, yes, Indiana, go Hoosiers. I think they're having a half-decent football season, at least my husband's telling me, although never as good as the Badgers. What are you going to do? But the Indy 500 is a popular car race in Indiana. It's a track race that happens every summer, I think, and I actually rode in a bike race called the Little 500 that's modeled off of this. So that's why I thought, let me use a car racetrack as a good way to make sure everybody understands how momentum works, all right? So, oh, Steve is from Fort Wayne. Awesome. Do you know Fort Wayne was an answer on a Jeopardy question 2 nights ago? Just thought you should know that, and I was very proud that I got it. All right, so coming back to the Indy 500 and the car race, all right? We've got this starting track here, all right? Whether it's the Indy 500 or any car race, I think most of you understand how vehicles work on the road. And so this will help solidify how momentum works related to price. So we're up in this helicopter and we're looking down below and we see this car. Now, jump into the car and you're driving. You go on the first stretch of the track and you've got to pick up speed, right? You're trying to win it. In this case here, there's immediately a curve up ahead. So you're not actively reducing your speed, you're not hitting brakes necessarily, but you're maybe letting go off the gas a little bit so that you don't fly around this bend and actually run into the crowd, okay? You want to make sure you keep some momentum, but you want to make sure you stay on the track. So you start letting go of the gas, you make the turn, then you're able to pick up speed again when you start clearing the turn, and you to pick up speed even more as you go on the next stretch. Okay, give me a car, C-A-R, or C in the room if you guys understand what I'm explaining here with the car moving on the road, because this is super important. We're going to translate it now to price and momentum, but it's this idea of picking up and slowing down, but you're still moving. All right, awesome. So now let's take the racetrack, okay? This is just a visual, guys. Don't worry about, the physics behind this, acceleration and all that. Let's just take that physical view of the racetrack and turn that into price. See, I added time and price to it, and now we've got momentum on the bottom. What we're doing here is explaining how momentum relates to price, and you'll see why it's valuable. So generally, when there's an uptrend in prices, a series of higher highs and higher lows, there's rising momentum. It needs to keep pushing forward and increase with it, okay? Now, when you get toward the price top, momentum often peaks before price peaks, okay? So it's leading price. It happens very, very often. Now you get a downtrend. Now, I'm not saying that markets always move from uptrends to downtrends, but to keep things simple, let's think of this as a flow of trends, all right? So you have some sort of distribution phase, market topping out, the bulls trying to make one last push, whatever. And then you have a downtrend that comes into play, series of lower price highs and lower lows. And as price is falling, momentum generally falls as well. There's still momentum, right? You have to have momentum to go in any direction, but this time it's directionally down. But just like with the price peak, when a price trough appears, and a trough is just another word for a low, then the momentum trough or low often leads the one that price made. Okay? So all of this points to the fact momentum is designed to give you a heads up in price. Because of the way it's derived and because it comes from pure price action, it is something that if you pay attention to it closely, you can get a heads up from price. Right? So give me an H in the room for heads up so you guys understand the importance of momentum specifically as an indicator. H for heads up, H for Hima, whatever you want to call it, and I'll take another swig of water. I think my throat is calming down. I was worried that I have to keep muting while I cough, but I think we're okay. All right, cool. So now we get into the good stuff, the exact concept I want to teach you. And yes, believe it or not, I'm now well versed enough in the sport of American football to use it as an analogy. So, pop quiz again. What team did I say is my husband's favorite that he's now got me to be a fan of? Again, based out in the Midwest. Recently had their star quarterback injured very, very sadly, although I don't know the latest news if he's coming back at the end of the season. But yes, you guys are paying attention. All right, the Green Bay Packers. And how awesome is this? This is just like, one of those random kind of stock images, but it looks a lot like Aaron Rodgers, the Packers quarterback, yeah? Just have to switch up the number here. But the way the football works, the game of football works, for anybody who's not familiar, because I heard in the beginning when Dan was asking me all where you are, you're in other countries. I get it. It's only us Americans who are so crazed about this particular sport. A few Europeans maybe. There's this entire field here, okay? And the Packers are on one side, and then their opposition are the other side. Now, there are a lot of teams that the Packers consider rivals, but the greatest rival is probably the Chicago Bears, right? Now, these two teams are each on the opposite side of the ball, and it could be starting at the 50-yard line like you see here. Okay, a yard is 3 feet, again, for anyone who's not American and not familiar with our inches and all that. And what each of these teams has to do is make their way to this area where they can score. So the Packers have to move past the Bears defense and get to what's called their end zone in order to score. You cannot score points in the middle of the field. I mean, you can technically kick from somewhere toward your side of the field, but until the ball moves through the end zone, whether it's getting physically run in there or thrown in there, or through those two pylons and making a field goal, you don't get to score points. Okay, remember that. Same thing for the Bears. They've got to get through the Packers defense to get to their end zone in order to score points. Okay, so the key takeaway here is you don't score unless you get to your zone. Now, let's take this whole football field and turn it on its head. Now we're going to squeeze it down, put it on a chart, and you can see we've got the relative strength index. Now, how many of you have heard of the RSI and actually used it in its standard approach? This will be a quick review for like a minute, and then we're going to throw that all out the window. Okay. I see some familiar names here, some of my subscribers, past workshop and educational participants. So yes, I know you're taking the RSI, but the relative strength index is a momentum indicator that is an oscillator. So what that means is that it doesn't just come up with any random number. It actually moves between 0 and 100, okay? It doesn't register any value outside of those. So that's why I've got those two arrows showing you the boundaries. Now, the standard setting is 14 periods. So this happens to be a daily continuous contract chart, meaning each front month is linked to the next when it becomes active of my baby, right? E-mini S&P 500. And this is just like a roughly 2-year time frame. In this situation, the 14 periods are going to be 14 days. But if this was an hourly chart, it'd be 14 hours. If it was weekly, it'd be 14 weeks, etc. Now, the traditional approach put forth by Wells Wilder in 1978, okay, when he invented this indicator, is that you register overbought signals, sell signals, when the RSI gets above 70. So what happens is that the RSI is moving between 0 and 100, and just like how momentum should, it's generally rising with rising prices. And when it gets above 70, the default, this is what TradeStation does. If you don't tweak it, it turns red. And you know, in the world of trading and selling, investing, we think red means sell. Well, it is a warning. And you'll see in a moment, though, why this isn't always the best way to use this. But this is the standard rule for where do you find sell signals. You don't just sell automatically because you get above 70, but that's the first place you start looking, all right? Just like that, on the opposite side of the oscillator range, when the oscillator moves below 30, which is this black line down right here, and you can see the purple highlights showing some incidences where you registered a value below 30 and then came back up, these are often considered very basic buy signals, okay? I'm not at all saying that the RSI in its traditional approach doesn't work or that these methods can't help you. I'm just going to show you something that I have been using for many, many years that takes what's already there and just kind of amplifies it. So before we do that, a couple of things that are important to remember about the traditional approach to the RSI. The general consensus is that it's only useful during trading ranges. So if that's the case, then obviously in this situation when you have a lot of strong uptrends, it would suggest that you can't use this oscillator when the market's trending up or down. So that's one challenge. Another is that you can get these signals, like an overbought signal, which might suggest that you start selling or exiting your longs even, but then those signals can be short-lived. So what might happen is that you might take an overbought signal as a sign to get out of the market because you're thinking that it's extended, right? Or you might even be more bold and then use that overbought signal like the two you see highlighted here to go short. And if you do go short, you'll be okay for a little while, but then the bigger picture trend might kick back in. So given these challenges and others of the RSI and its traditional approach, there's a gentleman named Andrew Cardwell who actually came up with what I'm about to show you, and I learned about it in my CMT studies. But like I said, I've been using it on my own for many, many years and have visually presented it in a way that I think makes it even more usable, okay? So when it comes to using only the standard overbought, oversold, let's just call BS and move on from it. So let's go back to this football analogy. Remember the Bears, okay? Bears have to get through the Packers defense to get to their end zone to score points. I specifically chose the Bears as the Packers opponent, not the Vikings, not the Lions, because this easily translates to us thinking about market bears, right? People who are short or want the market to go down. So this is the part where if you guys have a pen or a paper, or you're on Windows, you have a notepad or a sticky note on a Mac, this is the point where I say, get them out, and you want to write this down, okay? This is the only time when I'm going to insist that you write something down, and we're going to keep going the next 45 minutes here with just, you can sit back and absorb what I'm telling you. Okay, everybody have their pens or notepads ready. Give me a P for pen in the room if you're ready to take down these high-value numbers I'm about to tell you, all right? All right, a couple of you, awesome. So just like we started with, we've got the football field shrunk down here. We've got the Bears trying to get through the Packers. here's the thing, guys. When a market is bearish or has a downward tilt to it, it's not going to get as overbought as it would if it was a uptrend. So take that concept and then write down these numbers. On the RSI, I call these power zones. The bear resistance power zone is 55 to 65. Now, that's pretty close to 70, I understand, but we're talking about 55 as being the first place you might start to look for a topping pattern in price that aligns with resistance being found in a bear market. Okay, we're going to have plenty of examples to go through this, but these are the numbers. So bear resistance zone, 55 to 65. Bear support zone is 20 to 30. So obviously this includes the standard number 30 for oversold, but we're pushing the boundary down to 20. Do you see how if you look at the action of a downtrend this way and you watch it compared to these two red zones that you see here, you are less likely to get too bullish when the market, the oscillator goes below 30. Okay, this is what that prevents. Now, we're going to see these numbers again, so if you didn't get them this time, don't worry, but let's move to the bulls. So the bulls obviously have their zones, okay? The bull resistance power zone is up at 80 to 90. So what this means and what I'm trying to show you visually with how I use the indicator, which you'll see in a moment, is an uptrend is supposed to get more overbought. Bulls are supposed to push prices higher and higher and higher before they get tired. So you can see here how this 80 to 90 overlaid on this same ES continuous chart, you have very few sell signals compared to if you were just looking for price action above 70. Okay, so it keeps you generally with the trend. And just like we have a resistance zone, we have a support zone. And for bulls, the support is higher. It's not down at 30, it's from 40 to 50. Because when you're in a bull market and you have a period of working off overbought levels, as I call it, and just letting the RSI unwind lower, it doesn't need to get as oversold as it would have in a trading range or in a bear market. It actually is able to find a floor generally between 40 and 50, right? So these are the numbers. You're going to see them again, but this is the part I want to make sure you got the digits and the numbers down. So let's take an example of a chart that I use in a recent skinny and the mini, and this is how I lay them out, okay? So often 60-minute chart, and I put the time and the day, and then there's going to be a line you'll see that shows the plot. Now, this chart right now, I have like a white square covering most of the price action. I like to teach this concept by unveiling the prices to you as if it's happening, as if this is real time. So let's pretend that what this chart is, this morning or something, and within a few weeks from now, we would be able to see the rest of the chart, right? So we're going to unveil it and release the information to the right. But let's first review the numbers, because this is the last time I'm going to spell them out for you, and then we're going to just keep moving through examples. RSI bear support power zone is 20 to 30. And here's what you see on the left here. It's called RSI and Hima here, but the way I have an indicator is called RSI power zones. Honestly, when I had a programmer make it for me, they just called it RSI Hima, and with everything else going on, I didn't change it yet, but it's the power zones. And you'll see that I took the zones and I translated them into just solid lines, because I've had many suggestions to make these shaded areas, but I don't want that. I want to see my focus on the RSI, but I want to know when it enters or exits one of these zones, okay? So the bottom two red lines are the bear support zone, 20 to 30. The next two lines, which are green, are the bull support zone, 40 to 50. Beyond that is the bear resistance zone, 55 to 65. And then last but not least, the upper two lines, which obviously then are going to be further away, are the resistance power zones, bull resistance power zone, 80 to 90. So let's see how this unfolds. And we're also going to learn one particular signal you can actually use right away to take advantage of this knowledge of the zones that you have, okay? So everybody type a Z for zones in the room if you've gotten the numbers written down and you at least have that solidified and you can follow along. I'm going to repeat them, okay? You'll see them on the chart. All right, appreciate you taking that time for the active engagement here. So let's look at this same chart. Let's just reveal some of the price action. We're not going to go bar by bar. I mean, we'd be here all day. But we have this big distributional pattern, right, in the ES, and this is a 60-minute chart. So some of this is regular session, meaning 9:30 to 4:15 Eastern time. Some of this is overnight Globex action. I use 24-hour charts. If something trades 24 hours, I want to see the 24 hours of action. And you can see here with this yellow highlight that there was support down at the 20-30 area, or at least it extended there. We don't know yet, based on what we see here, if this is going to turn out to be support. But obviously, this is still hindsight, so I'm showing you situations where these things unfolded. And from here, what we had was a rally back up to the 55 to 65 Bay resistance power zone. Okay. Then another push lower. Now, here's the interesting thing, okay? It's not just the trading between the zones that you just can completely act upon. It depends on what your time frame is, what your risk parameters is. But there are signals that really can clue you into the most kind of bang for your buck opportunities. And what we see here is price making a lower low, but the RSI actually is making a higher low than the prior one. If you compare the two yellow highlights here, the RSI on the second one is higher value than the last one. I thought momentum was supposed to go down with falling prices, right? Well, this brings us to our first kind of signal we can employ here. So when we have a situation where there's been a downtrend in price, lower low in the price, but a higher low in the RSI, this is what's called a bullish divergence. Okay, this signal is from the original work by Wells Wilder. This is not a brand new thing. But when I learned about divergences and then I learned about the power zones, I started putting them together and realizing that certain divergences taking place in certain zones produce certain opportunities. And you'll see what I mean here. So let's take this situation. We had a bullish divergence, right? Lower low in price, higher low in the RSI in the bear support power zone. In that situation, in my experience and what I use as my approach, it's best to exit shorts or tighten up stops on short positions if you have them. You'll see here that I purposely don't have a bullet that says buy, 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 okay? So in this situation, if you were short or had tightened up your stops on a short, it would have prevented you from getting caught up in this sizable rally, which initially held at the 55 to 65 area. But look at what happened here. We had a price uptrend slowly forming. Higher high, higher low than the previous anchor low. Higher high, higher low. So this is where my Gann knowledge is coming into play in terms of what defines a trend change or a buy signal. Gann had many rules listed out in his commodities book. And look at what the RSI is doing, guys. See how in all of that uptrend forming, sure, it's still in the 55 to 65 area, but it's not getting as oversold. It's holding that whole 40-50 area. So this is your first clue that, and then from there, it really took off. And you had a couple of opportunities where it actually hit the bull support power zone and ultimately extended into 80 to 90, which is the bull resistance zone. These two trend lines here were trend lines that I had drawn on my chart. This is just what happened. That's where they ended up falling, all right? So I'm getting a little flag here that says I might be having network issues. So can you give me an A for audio if you can hear me? A for audio means you hear me just fine. That way I know. I've noticed that when I started, doing web-based education, if I just tell people to say yes or no, and then I look back at the question box, I don't know what question they were answering. So A for audio, awesome. All right, glad to know I'm okay. All right, so let's move on to some more examples. Now, before I do that, this is such a common question that I will make sure I address it. What types of charts and time frames can use RSI power zones? Any active market on any time frame. Obviously, I'll be showing you futures and stocks, but when we pull over my TradeStation slides in a few minutes, you will be able to see any market tickers you put out. If I have the subscription to the data, I'll bring it up for you. But this is applied on any time frame in any active market, okay? You can do this on a 60-minute chart, daily. Here's one thing I will say that's important. A time frame means that you have steady intervals. A tick chart, by definition, does not have a steady interval time frame, right? Because the tick chart only moves when there's enough volume such that the price tick actually changes. It doesn't automatically move minute to minute or hour to hour. So what I want to make sure you understand is that I do not advise using the power zone signals or the zones themselves on a tick chart. However, if you heavily trade on a tick chart, use the next couple time frames higher for your signals. So you can always use, a 5-minute chart or something like that to kind of just anchor where you are with the zones, all right? Now let's go on to Google. Now this is where I'm going to bring in a little bit of Gann work too and show you how it melds well with the power zones. First, let's look at one of these situations where RSI and power zones and the price are not congruent. Where you see all these question marks was on a weekly chart. It's squished up because I'm showing you like 10 years of data here. Google had a situation where price made a higher high, but the RSI made a lower high. As you might imagine, this is the opposite of the signal I taught you earlier. So going back to the same illustration, we have a situation where we have an uptrend, price makes a higher high, and RSI makes a lower high. This is called the bearish divergence, right? Now, in this situation, this is your first hint that steam might be running out and this trend might either be pausing for a while or turning lower. So in this situation, we had a bearish divergence, and then I came in and saw that it was in the bear resistance power zone. And again, after many years, have come to realize that this is a great opportunity to watch for a sell entry setup on price. This is more of an entry setup, okay? So this is a situation where obviously you are not using this all on its own. Let me make that clear because maybe it's not obvious. I don't just trade power zones. I use the power zone analysis alongside many different technical analysis tools, but mostly price trend, certain trend line applications, and my Gann-based knowledge. So in this situation, you can see that there was a nice healthy move lower, okay, where my mouse is, but still in the grand scheme of things, consolidation for Google. And after chopping around, it did chop around, but look at all the times it held from 40 to 50, okay, where my mouse is jumping to. This last highlight shows where the boost from 40 to 50 really propelled this stock and kept going, all right? So with the situation where you now had a bullish divergence, just this latest signal here, guys, in a bull support zone, all right? So this is when you watch for a buy entry setup on price because this is usually in favor of the greater trend, and that's what is optimal to do, is trade in the direction of the bigger trend than your time frame. Now, you see this blue line that's been drawn out here. I'll get to that in a moment. What this line is it's a projection. Now, you can probably find Fibonacci projection tools in your software, unless you have a Gann-specific software, which, TradeStation isn't, but I've made it such that it is. You won't have Gann tools drawn on there necessarily, except for the fans and the traditional ones. But here, this is Gann 8s, okay? Gann applied 8 divisions, meaning you take a range, you divide it 1, 2, 3 times, and your results are 12.5%, 25%, 37.5%, and so on until you get to 100%. Fibonacci numbers, for those who are not familiar, are a natural sequence, but the numbers actually are very close to the Gann 8s numbers. Like 23.6 is Fibonacci, 25% is Gann. So we could have a whole discussion about whether you should use 8s or Fibonacci. My personal theory is that Gann used 8s, knowing full well about Fibonacci, okay? Fibonacci predates Gann by a long time. But that Gann was not working on a computer, guys. He did not have all this fancy stuff that we have. He had to do a lot of math by hand. Don't you think taking a range and dividing it into 8 is a lot easier than taking that range and doing the math to divide it by Fibonacci ratios? That's my theory. That's my theory, is he just made his life a little bit easier because he knew the variance between the numbers was not that much. Who knows? Maybe he still did the Fibonacci math on the side and overlaid the two. But we're going to use 8. So what does that look like? Well, in this situation, we're going back to this 2008 low. Obviously, it's a significant low. Taking that low and connecting it to the February 2014 high and projecting that entire advance from the January 2016 low. Now, what are we projecting? Well, because we're taking a move and wanting to find projected resistance levels in brand new market territory, we're going to project the 8s percentage, show you as we walk through them. Again, unfolding the market action as if it's happening live. So the first projection, and this is grayed out because it's old now, I will show you some new ones, and these are valid. I just did the math like 2 days ago. So at the end of this series of Google Slides, you can write these down and see how this works. You'll write down all the lines that you end up seeing in solid blue, okay, and what those numbers are. So 62.5% proved useful because not one, not two, but 3 times it was resistance. All it did was correct the RSI back to the 40 to 50 zone. You see that? There was bearish divergence, but see how the bearish divergence was what it was in no man's land, and you'll see that in another slide I have. It wasn't really specifically in the bull resistance zone. It wasn't specifically in the bear resistance zone. That's why I like looking for resistance that are specific to a zone. Now, the next resistance wasn't met for a little while, almost a year, but that was a 75% projection. So these are numbers that you could draw and lay out in the after the middle of 2016, okay, after you have this break higher that confirmed all of this swing highs and lows. And from that point on, all of these numbers are just out there waiting for you. And because this is a stock, you just have to keep an eye on if the stock gets split or like something happens where the scaling is going to change. But in this situation, moving through this, this was already after we went from GOOG to GOOGL, so there was nothing to be really too stressed about. Now, when we got to 75%, again, look, all of that happened is you got to 75%, and then we're still holding above the bull resistance zone. We're below the bear resistance zone, but basically you're just kind of at neutral, okay? So this is not telling me about a trend change. This is just telling me RSI is just kind of churning, as price sometimes just churns sideways. Continued higher, got to the 87.5% projection at 919.61. And in this situation, when it happened, you had the RSI reach the 80 to 90 zone very soon after. And then after that, you got to the 100% projection, chopped around there, okay, for 2 sessions here, actually, or sorry, 2 different highs here, kind of like a double top. But all that was happening was the RSI in the weekly chart was just working itself off, unwinding, and staying above the 40 to 50, getting ready for the next move higher. Now, this is the slide where I'm saying, and you can take a screenshot or a photo, that's fine with me. These are the 3 levels that still exist. Now, I did capture this chart, I think, the end of last week, right? So we'll look at the trade station and see, if we traded through these. But I don't think so. So anyway, 1103.34, 1164.58, 1225.82. Those are actual prices that are upside areas that are likely resistance for Google. And you can see how this application went along with the power zones. Okay. So give me an E for 8s if you're following along with what I just did here. Because there's not that many questions in the room, which could just be because, you guys are still waking up, which I totally get it. All right, thank you for your response and engagement. Now let's keep going here. Tesla, okay, the reason I'm showing you this chart is because we're not going to go through the details of it now, but you can use momentum and price and actually calculate price targets. All right, I'm going to show you an example of the end result, but I want you to keep that in mind as we continue on. So let's look at the zones action here. Okay, this is a daily Tesla chart, about a year price action, and we've got this move that came up to the 80 to 90 resistance zone. RSI worked itself off, but look where it worked itself off to. Okay, you may have been following this price correction, guys, in the early spring, but what happened with the RSI is, yes, it went lower and it looks a little scary, but all it did was work off from 80 to 90 back to 40 to 50. Then rallied back higher. Now we had a situation where we had a bearish divergence, but it was in no man's land. I know that the upper area came close to the 80 to 90 zone, but for the sake of applying these setups, it's best to start with either one of the peaks in the bear divergence or either one of a troughs divergence being in the zone technically. So to me, this is technically not in the zone because it came real close and pulled back, so it's no man's land. I have no recommended action. Does that mean it wasn't tradable? Of course not, but that's just my view on it, okay? Now, we ended up getting a choppy bit of sideways action, so in this particular case, that was a good thing to kind of just stay out of it. All this did, even with this choppy higher high, then lower low, and like all this mess in Tesla on the daily chart, the RSI just nicely and neatly came back to the bull support zone, held there, hung out, and then boom, rallied back higher. Again, oh, we have a bearish divergence. This is a triple bearish divergence, okay? 1, 2, 3 higher highs, 1, 2, 3 lows declining on the RSI. Now, this is situation happening again in no man's land, so I don't have a recommended setup to follow because I just think it's important to avoid these in the beginning. When you've been using the RSI power zones for as long as I have, well, then you have other tools to layer to be able to trade these, and I'll talk more about what those might be later. But this ended up being a nice sizable price correction, absolutely tradable from a short-term perspective, okay? So you're going to, when you apply this approach, because again, what I'm showing you now, you can go and take and apply to markets right away. You're going to feel like you're missing out. Well, guess what? As my dad used to say, there is always another train. And this was actually pretty apt because I remember when I was a teenager, taking the Long Island Railroad from our town into the city, you know, hang with my friends or go to events. I don't know, I was a really late person as a teenager. I think most teenagers are. And I would miss the train and I would freak out, but have to wait 30, 40 minutes. And my dad's like, there's always another train. Same goes for trading. So if you miss a trade, it stinks. It really does. Because you feel that feeling like, oh, I was right, especially if you end up being right on your analysis. But don't freak out about it. Get really good at using the tool, and then you will open yourself up to more possibilities for taking more of the trades. Right? So let's come back to what happened here now. This is the July 11th candle on Tesla. On July 11th, between what was happening on the daily RSI power zones and price, there was an opportunity to calculate an upside target for Tesla. Okay? So this upside target is $383.37. That was what it was. And you could calculate that as of July 11th, and you can see that by September 18th, so it took 2 months, but you got there, and it was choppy. I'm not saying that this was like you buy it and then boom, the market gets to that target, but give me a T for Tesla and a T for target in the room if you think that knowing this, being able to calculate this would have been helpful. Give me a T if that would have been something that, if you could do that on any market, using momentum and price to calculate a target far out and keep you with the long-term trend would have been nice to know. All right? I think most of us agree. Will you always reach those targets? Of course not. Sometimes price action and momentum action will change along the way and invalidate the target. But when you calculate them, at least it gives you a perspective and keeps you with the bigger picture trend moves, especially for those of you who are swing traders, all right? Now, this is where we are after that. And as of this moment, I don't see a new momentum signal, but I'm just showing you. That's just one example of one out there. Now, let's come to this chart here where we have this concept of people thinking that, okay, that's great that you like this indicator, Hima, and it's momentum, and it's the RSI, you know, it's not like a hocus pocus thing. Sorry, late Halloween reference. But what about? Those are the questions I usually get right away. I get it. It's human nature to question things. Well, I'm telling you up front that unexpected market activity, things like political events, which you'll see in this example, they don't change this approach. It doesn't mean you throw the zones out the window. It doesn't mean you mess with those settings. This is another super important thing to write down, guys. You do not change the 14-period setting. It must stay, okay? I didn't change that. Notice, all I did was give you the zones on top of the existing 14-period RSI. That is vitally important. So, oh, I've got Marcelo already catching on here before I put this on here. Yes, absolutely. This is a 40 to 50 zone that held even on our crazy, unexpected outcome election day. So, well, unexpected based on what the polls and things said. So, again, the important side note, do not change the RSI setting from 14-period. Keep it at that. But yes, the U.S. election, we just saw this is the NASDAQ continuous chart, held, continued higher, 80 to 90, it reached, started working off a little bit, but this was not a sell signal necessarily. It was just a sign that this uptrend was reaching its full potential. Look at what happened, okay? When we got to that 80 to 90, between that, so that was February, and the France election, all the RSI did was work itself off back down into the bull support zone, come back to the bull resistance zone, and now with the France election in 2 days, it went from the 80 to 90 bull resistance zone to the 40 to 50 bull support zone. It was a volatile couple of sessions, but it still respected the zones and kept you on the right side of the market if you were going to continue buying, whether short term, whether, you know, this is a bigger picture kind of play. Then later we had the summer, the British election, And in this situation, we also found support in the 40 to 50 zone. After that, a couple weeks later, we had the North Korea missile test. Okay, this isn't politics per se or a planned event, but this is really freaked people out. Now, this is the situation that unfolded. You had this double, if you're an Elliott person, I don't know if this is technically a zigzag with the two legs, but you had a two-legged correction, whatever you want to call it. But look at all the RSI did. All it did was work itself off back into the 40 to 50 zone, okay? Now, there's an important question here about why not change the RSI period from Matt, because Andrew Cardwell, who came up with the numbers for these ranges, started his work on the RSI in 1978, the same year that Wells Wilder put the RSI out. And he, since then, I know him now personally, tested a couple different numbers, but in everything I've seen, the 14 period works best. You don't take my word for it if you want to go test it out, but there have not just been one or two people testing this out, and the 14 period keeps bringing it back. If you want the real true reason why I believe it works, it's because of the original reason that Wells Wilder even picked the 14 period. It's because 14 periods is half of a lunar cycle. A lunar cycle is 28 periods. You can call it 29 too, depends on how you're looking at things, but 14 is half a lunar cycle. Whether you believe in the tenets of financial astrology or not, whether you care about planetary movements or not, that is how the RSI was designed. So it's like, if you're using the RSI, you're already applying the lunar cycle. I don't want to mess with the lunar cycle. So I suggest doing heavy testing before you go question this, but it's like 40 years almost that this has been taught this way and shown with the 14 period setting, okay? So let's move on here, because I've got to wrap up soon and then get to some live charts for you. Now, this is where I think things lifted off again. Again, this chart is only through the summer, but you can see that they held at the 40 to 50. Now, here's an important thing. We went through several examples, and again, you can take a screenshot of this if you want. And what I have done is taking all these tenets and I've put them into different things, and I call them cheat sheets like this. So the cheat sheet is just a summary of a divergence versus its relative zone location. So in this situation, we've got 3 that we've done. Now you're probably wondering, well, what about the rest, Hima? Where are they? Well, between this question and a likely beginner notion you have that it's all about trading between the red and green zones, I want to warn you, it is not that simple. Even the divergences don't make it its full force, okay? Because like every other momentum indicator that's out there, while it's a powerful tool, it is not perfect. And with my years of experience, I actually got loads of other tools that I use to make the most of the zones. And the good news is that whether you were brand new to studying momentum, like Marcelo said he's never seen the RSI before here, or you've been using it for a long time, like many of you in the room have said, this approach can actually help you make more money and be more consistent. And that's what you guys want, right, is to be more consistent. Big equity swings are generally not healthy for most people. So how do we take this power zones concept to the next level? Well, this is where I offer you my Power Zones workshop. It pulls from my 15 years experience. It is totally content. There's no like hype or extra stuff in there. It's pure, you pay for something, you get it. And there's an on-demand recording of the first 2-hour class I did of it this summer when the course launched. And that is what you view. Eventually, I will translate that into little bite-sized modules, but it's the same content that it would be in the current Access recording. So again, 2-hour. And what this gives you is a variety of tools that I use, which I'll talk about in the next slide. But on top of the on-demand recording, I actually would have a live Q&A workshop with you that's already set for Wednesday, December 6th at 4:30. If you're like, oh my God, I already have something to do Wednesday, December 6th at 4:30, don't worry. It's going to be recorded and it will be put in the same portal as your original RSI class recording, right? So what will you learn through the on-demand class that we would then go through in depth in the live Q&A? Well, you will learn definitely my favorite RSI pattern setups, not just the divergences, but how to calculate the targets like the one I showed you in Tesla, okay? Candlestick chart patterns that I have found to be optimal in combination with RSI power zones. I've been studying candles for years. In fact, I used to grade the candlestick essay questions for the CMT exam on no candles. I'm not I don't know every single one, but I'm pretty well versed in them and using them for a long time. Ones that I look for every day on any time frame, and I show you how I use them. Now, bar chart reversal patterns is slightly different. Sometimes it's actually better to just focus on the price bar and not what candle pattern it's making. And so this approach that, again, came from my studies, came from me picking up other materials, but then making them my own and applying Gann's twist to it, will show you a tool that is actually really, really powerful. That's probably like my favorite price support resistance type of tool. Now, just like the cheat sheet I showed you that wasn't filled out all the way, you will get that filled out, of course, along with other cheat sheets that emphasize the contents that are in the class. So, you know, watching a 2-hour recording and absorbing all that, you can watch it 10 times, but when you're sitting in the moment and trading, it may be hard to remember the quick details. So the cheat sheets are literally 8.5 by 11 pages. There's like 5 or 6 of them that you can print out and keep by your side. I have them right by my side at all times. Now, you're also going to get examples of RSI power zones daily. How? Well, because you're going to get access to my Skinny and the Mini. Now, I'm very excited to say that since the last time I offered this workshop, the Skinny and the Mini member portal in my new system is officially complete. So not only are you going to just get the email reports, the way I still do it to my subscribers, you actually get full access to everything a Skinny on the Mini member gets. So this includes daily analysis of the E-mini S&P 500 futures. So that's every trading day. On trading days where 2 or more major markets are closed, I do not offer the report because liquidity just doesn't seem worth it to me. But for example, Veterans Day, no markets are closed, we'll have a report and stuff. You'll get that. And then on Monday and Wednesday, this is new guys, on Mondays and Wednesdays, I give you the exact same format, which I'll show you in a moment, but studying the NQ futures. So if you trade that market, you've got a whole bunch of levels, you've got the perspective and the long-term trend, and every Monday and Wednesday you'll get that report. Now, all of this would officially start. So if you sign up for the program, you get access to the portals and the RSI workshop right away, like immediately. But the official 30 days of your Skinny and the Mini starts on Tuesday, November 7th, and ends the same day as the live Q&A workshop, December 6th. So think about this, okay? If you sign up soon, like now, then you'll immediately be able to access a couple things that are in the portal. Past 30 issues archived. You'd be able to instantly go and see what I published this morning, like 2 hours ago, and everything back for 30 days. And I have monthly member sessions for my subscribers. So these are once a month, an hour where we just go through Q&A, we go through markets together, and those get archived. And this started this summer. So there's already several hours of those videos available, which while you have access in here for 30 days, you get to do. This is not me getting you on a subscription. This is me just offering this as a bonus with the RSI workshop, and your access will shut off in 30 days. There's no recharge, there's no renewal fee or anything, okay? So here's what the Skinny and the Mini looks like. Every morning I put in a chart. This is my ES chart that's marked up, and it's got the details of it below. 60-minute chart most of the time. That's, to me, just a true pulse of this ES market. Now, there's always going to be this gray horizontal line or vertical line that lines up with something that's really important to me, prior commentary. What I do here is I literally take what I wrote in the last report and I copy and paste it. That's why it's in quotes, verbatim, okay? And this is the best way for me to be accountable to you guys. Like, was my analysis useful? So it'll say yesterday I wrote, or it'll say Friday I wrote, or whatever the last report was. Then we move on to a recap of the market activity. Sometimes it's at length if it was complicated or choppy. Sometimes it's a simple couple of lines, and it's very easy to see whether the analysis would have been fruitful or not. Then we get to the outlook. This all isn't always this long, but I really try to break it down with the education of why I'm proposing my outlook, the scenario that I think is likely. So therefore, if futures, the second paragraph is what I'm leaning towards is likely happening, but I don't have a crystal ball or, you know, magic 8-ball or anything like that. So it always provide the alternate scenario as well. Meaning if I have a vision of a bullish outlook, I'm still going to provide, well, here's what would happen if support breaks instead, and where to watch for the next support key level, okay? So along with all this, I actually give you the levels. So if you want to read and get the full outlook, which I recommend, you read through everything, but here you can take these resistances and supports, which are updated every day, fresh from my brain. I don't have like a scan or something coming up with these for me. They're not pivot points or like a Gann calculator. This is me looking at the action, picking and selecting and dropping other ones off. And I always give you ample supports and resistance that represent where I think the potential max range would be for that market for the next day or two. And something new I added this summer is a trend line section, because I use a lot of trend lines and I want you always to be able to follow along and recreate them on your own charts. Okay. So on top of all this, okay, this is the same situation. All of these are bonuses to the RSI workshop. You get the actual indicator file. I have it available for the following: TradeStation, Thinkorswim, NinjaTrader 7 and 8, Sierra Chart, Trade Navigator, and eSignal. And one of my longtime awesome customers set it up in his own Ensign, and he provided the directions for how anybody else can do that. As you can see, some of these are a little complicated on the setup, so they have download instructions. This is just a screenshot from the portal, okay, where your RSI workshop will be and your indicators will be. Then you'll get access to a different portal for the skinny and the mini. It all comes from the same website, but you just pick from a different menu. So I just want to share one recent workshopper's experience. You know, James said that he was skeptical going into my introductory webinar. He's talking about this, what I'm doing with you guys. But he was really glad to attend because he actually right away took what he learned, just like you with me, and applied these setups. He then came in, bought the workshop, got the indicator for Thinkorswim, so he was able to put my zones, like the lines, onto his chart and not have to, you know, try to visualize it or anything like that. Excellent setups on NQ, ES, and SEAL intraday futures every single day. So I have stock traders, Forex traders, all kinds of people who have participated in the workshop and found it via value, but I thought what James had to say was really interesting because, you know, he was skeptical at first, and I can respect that. So what does this all come down to? You're probably wondering, well, this is like a lot of stuff. She keeps saying bonus. What does it actually cost? I get it. So special offer here for MarketFest attendees. And as soon as I share this, we're going to move on to live charts. I still got another 8 minutes. You've got the Power Zones on-demand course for $297. That's the value, okay? This is not what you're paying, but that's what it's worth. 30 days of Skinny on the Mini full access is $97 per month for the average customer. The RSI Power Zones indicator itself, sold separately, would be $97. And the live Q&A, because of the amount of time I put into it, would be a $97 ticket if you were to just have that on its own. So when you add this all up, if I did my math right, it comes to $588. But you're not going to pay anywhere near that. You can sign up for my next class of the RSI Power Zones workshop for $97. It will include all of these bonuses, 30 days of Skinny and the Mini. This means you get 30 days of reports on the ES and the NQ of how Power Zones are working. You get the indicator you can download to any one of the softwares I showed you, and you get automatically invited to my go-to webinar about a month from now. You can get all this at himareddy.com/go, and it's pretty self-explanatory. If you have questions, email support@himareddy.com. Now, you know, why you need this workshop on top of this education. Like, you probably want to take what I'm showing you and advance with it. You could, but the thing is, you need detailed strategies and a detailed overall approach to be able to best trade with this indicator. Also, if you go and take this and try to do it all on your own, then you're kind of trying to reinvent the wheel. Let's prevent that, okay? I've done a lot of hard work to put this together for you. And you'll save yourself time and money in the long haul because you're taking a set approach that has worked for me for, like I said, 15 years in my different roles, trading, analysis, you know, writing a book, teaching to professional as well as retail clients, and maximize your time. So again, to sign up, go to himareddy.com/go. Now, the important thing is this deal and this offer at this price is not just available till the end of time. I do this in classes where I have a start date and a graduation date, and you only can sign up for this between now and next Wednesday. It ends Wednesday, November 8th at noon. Why? Because your official first Skinny and the Mini goes out on Tuesday. Your second one goes out on Wednesday. I don't like people late to class after that. So if you can't figure it out this week and you can't participate, then you can wait for another offering. I don't know when it'll be next time. But the other thing is, think about this. If you sign up now or tomorrow or whatever, like you said, sooner than later, you'll get the portal access and you're going to get extra Skinny reports because you'll see them in the portal. So they'll start coming to you via email on Tuesday, but they'll be in your portal right away. So especially if you're E-mini trader, this is the best value you can get to get a taste of my work and actually get an education, which has proven valuable for other customers of mine. So I'm just going to leave the link up here and take a few minutes to go through some live charts. So give me your tickers, my friends. Give me your tickers. And here's my little general master screen. We're still going to completely honor the breaker unit shortly, but I've got 5 minutes. So I want to see your tickers and your questions. So you have a question here about you used the 15-minute or 60-minute chart, but can you use smaller time frames? Yes, yes, yes. I answered this in the Q&A slide, which is absolutely you can look at this on any particular time frame. All right. So I've got a couple questions here. So I see one about FANG stock Netflix, which I already have here. So let me jump to that one. This is because last week I actually sent out a video to my subscribers that was talking about, let me see. Okay, so this market's been much quieter than the other FANG stocks, but here's what I pointed out to them, okay? And you can still see it in action here. I'm just losing stuff here. Okay, so this is my TradeStation daily chart, candlesticks, RSI power zones on the bottom, same exact indicator as you saw on those like still charts in the PowerPoint. Look at what the RSI did what the RSI did with what price did, okay? From a Gann perspective, here you had a new high at 204.38, price pulled back and remained above the old highs from September 21st and 22nd, okay? Old highs become new support when you're in an uptrend, and they respected a 50% retracement. What this tool is right here, guys, is a Fibonacci with everything deleted, okay? It's called Fibonacci price extension retracement. I delete everything. I keep everything grayed out except for the 50%. That to me is the most valuable. Why? Well, it's the one that overlaps with the Gann 8s. Think about it, right? 50% on a fib extension or retracement and 50% on a Gann, that's the only two that are in common. To me, 50% is everything. So we had been holding this floor, and I said last week on Monday, so on Monday, well, last week, which was the 23rd, I said this is important support at 190.47. Hey, it looks like we've held it. So Netflix still has a little bit of a ways to go. For the person who asked about that, which I see is, I see initials DE, so I'm just going to call you D. But you can see that you can also draw trend line supports and resistances on the RSI. Anything you can do to price, you can pretty much do to momentum because it's a derivative of price. Okay? And with that, you can see here that you've got this RSI that's been holding this uptrend, low, higher low, low, higher low. So I think Netflix probably has more upside, but just needs a little time. All right. So let's see Apple. Okay. I'm answering the ticker requests that I know are going to probably cover the most people. Okay. But here's another one that I sent an update last week. And this one, man, anyone who watched it, I hope that they were trading Apple or options and related to Apple or something. Okay. On October 23rd, I said we are at key support. We were literally at the 50% retracement, okay? It came to 155.02 as a calculation. The low on October 19th, 155.02. I mean, exactly, to the penny. Held above it for these 5 days. Earnings came out, boom, right? I believe it was earnings. I honestly wasn't paying attention to the news after, but on Friday the 27th, when I looked at what happened and saw it rallying, I was like, Bill, this is obviously pretty fantastic. And look at where this liftoff happened, guys, okay? I'm going to use these lines, these highlights to show you. All this basing was happening as the RSI was trying to bring itself back up from the bull support zone, 40 to 50. And in the process of breaking to new highs, it pushed above this trend line. Now, I do see a potential zone of resistance that might be ahead, and I'm going to make sure I put that out here. Okay, so we're taking the parallel projection of this line, and I would say that right now this is at about 175. Okay, so that's your next upside target on Apple. And I'll take one more ticker because I've got one more minute, and I'm going to just stay with the FANG because it'll be, again, more broadly applicable to everyone. So with Amazon, loading, I think, yes. Okay, so with Amazon, this also broke higher, and now for the next upside target, I don't know about, if you've got a long position, then you could probably take advantage of this, but getting in long now, you need to wait for a pullback. But again, Amazon held a 50% retracement all last week. I mean, again, I published about this on the 23rd and said, if we hang out near this level, even though we close below it, from there, I expect to push higher, pushed way higher, went to new highs, and the next upside target as of right now is about 1175. This will keep creeping up as more time unfolds. Because look, guys, last comment here, we are nowhere into the bull resistance power zone. And if you look at the daily chart of Amazon, going back, let me change the time frame, and then we'll wrap up here. Let me just, I don't know why, sometimes the chart doesn't fully load. There you go. All right, so you can see that the bull resistance power zone was pretty helpful many instances here. All right, I'm going to put a blue highlight for each, and then we're going to wrap up. So here, bull resistance power zone, bull resistance power zone. The last time we got to it, we just got to a little bit of consolidation in terms of price and then continued higher, but that was a very nasty kind of choppy working off of the bull support of the RSI. And here we are back towards that area. So that's a take on this, and thank you for your time. I want to make sure you guys get your break. Thanks, Dan, for having me, and thanks, Andrew. Glad to see you in here. Thank you guys for new. I hope this was something that you found to be very valuable, and I hope to see you in the workshop. Again, himareddy.com/go. Remember, this is available until Wednesday, November 8th at 12 p.m. Okay, thanks again. Sure, no problem. So right here, guys, okay, you get the on-demand RSI Power Zones course. You get full access to the Skinny and the Mini membership. You get the Power Zones indicator, so that will be in the same portal as the on-demand course. And you get the live Q&A workshop. So you get a full live hour with me, purposely done like a month later because I know this is a lot of information to digest. And let me also say that if you have any questions along the way, you can reply back to any of the Skinny on the Minis I publish, and I'll do my best to answer you if it's a content or analysis question. Any administrative questions, email support@himareddy.com. And I hope you enjoy, especially because the Skinny and the Mini full access portal is a new offering. And again, I'm going to reinforce this concept with you every day. That's not something you see all the time. So after 30 days, you should be pretty familiar with the power zones.